Today, on this little ad hoc segment of Forex Focus, wanted to cover if dollar streaks last, how long they last, because we're set up in an environment that we haven't been in for many times this year, at least, where we have dollar swinging, rallying to the upside very consistently. So if we go to the next slide, you'll see that the background I'm working with for this analysis is, of all the events you covered, FOMC being one of them, perhaps the main focus for FX traders, at least in terms of regularly scheduled programming. Dollars ripping against all major currencies on the heels of that, even leading into that. Not much of a fake out on the table one way or another as a result of this meeting. Powell alluding to, the next cut perhaps not coming in December, as markets pretty much all but priced in leading up to the meeting. And now here on a Friday, we're looking at 4 straight dollar up days in a row. Here looking at euro dollar, that means 4 down days for the pair, moving in the dollar's favor against the euro. And not only has it been 4 days in a row, because you could see some 3-day moves in one direction, and the magnitude of that being a little bit of chop, especially recently in FX markets. Volatility hasn't been the highest, as there's been so many other asset classes to look at in 2025. But I wanted to do a little bit deeper of an analysis, a back test, if you will, into what scenarios, because when you're looking at FX markets, spot FX markets in particular, you really have to get directional if you're trying to engage in these markets. You have to hit the buy or the sell, everything traded in pairs, so on relative strength or weakness. So I wanted to see, do contrarian or momentum strategies favor well historically? Which one wins out when you have this kind of backdrop? So if you go to the next slide, please, I'll walk through what we looked at the past 6 years of price data using daily data, mainly daily closes for this. But I looked at 3-day directional streaks. So this I could have done only for dollar up days, but decided to keep it a little more robust. And this is inclusive of if dollar swings higher 3 days in a row, or if the dollar depreciates 3 days in a row, which we've seen a lot more often this year. And also filtering for the volatility environment a little bit by requiring these 3-day directional streaks to exceed 1% total in cumulative movement. So in FX markets, an outsized day would be around that, anecdotally around that 0.5% price level in different pairs, different pairs having different volatility characteristics of their own. But this was, a pretty sound benchmark for, what would be considered a notable move in one direction or the other, and wanted to take into account symmetric risk reward here using a 0.75% profit target and stop loss target to simulate some of these historic trade performances with a 5-day max holding period. So keeping this pretty short term. If you're logging into the platform, whichever platform, and seeing a trending dollar market like this, can you take action in the short term, looking for either continuation to a little bit lesser of degree than we've seen following the trend, or can you get a little bit of a pullback there? And a pretty 0.75% with the leverage offered from these FX pairs, isn't nothing. And so what I did is calculate win rates, dollar P&L and ROI, which does factor in those leverage ratios, and conversion metrics based on the most recent exchange rate, just compiled this morning, based on one standard lot trade. So that's requiring margin from around $2,000 to $5,000 for these major pairs. But as you know, we can size this up or down. But just looking at ROI, those characteristics will be the same no matter you scale it. So first,
Well, quick question.
Yeah,
What's HLOC?
high, low, open, close. So
Oh, okay. Okay.
that's what I used. But for this, I believe it was just closed data, as I only looked at, you know, 3-day directional streaks. So the rolling closed data.
Love it. All right.
Yeah. So looking at the first scenario on the next slide, momentum following the move. So this one already spoiling some of the takeaways here is that a lot of red on the screen in terms of average P&L, average ROI, win rates less than 50%. A lot of numbers on the screen, but just to walk through it, we're looking at symmetric risk reward, right? So all things considered, that should be 50-50. And so a lot of these, all except the Swiss franc, are below 50% win rate, with a lot of negative. I guess dollar yen
USD,
also.
JPY. Yeah.
Yeah, dollar yen also a little bit favoring these momentum strategies. But in terms of average P&L and average ROI, very muted on those momentum trades. Average days held tells you, we had a max 5 days for this study. But usually, if you're following the momentum, you're in and out of this within 3 days. And then this average ROI takes into account, you see bigger swings in the euro and the Canadian dollar because those are the lowest margin pairs, the highest leverage pairs, whereas the Japanese yen and the British pound are the most stringent. So here seeing less success with a sub 50% average win rate and negative returns for most of those pairs. Looking
Okay.
over at the contrarian on the next slide, this one is where it really starts to get interesting because when you're fading these 3-day trends, which is funny because right now we're on our 4th day of dollar increase. So if I was to do this yesterday, this would perhaps be an instance where it did not move in my favor on day one. But given these profit constraints, we are seeing win rates of more than 50% in a lot of these major currency pairs, even as high as 59% for that euro. Similar in terms of average days held, just under 3 days. And then average P&L figures, a lot more green for those simulated trades, with euro dollar being the outperformer here, getting you $140 on average for a pair that's margined at around $2,200 right now, given the current exchange rate. Anything here stick out to you, Jamal?
I mean, yeah, the euro for sure.
Yeah.
The euro win rate and the way that average P&L has been pretty good.
Yeah. So all of these, a lot of variables to either restrict or let run, your profit targets. If you wanted to do kind of a 2-to-1 risk reward scenario, perhaps that would favor momentum strategies. Maybe some more chop before breaking through some of those. But going to the key takeaways, this is pretty cut and dry for these trading criteria, and this study in particular. If we can go to the next slide for key takeaways. In this study, contrarian strategies have outperformed. So in either direction, to dollar strength or to dollar weakness, it's much more rare to have continued moves in one direction in these major dollar pairs. As historically, over the long term even, these are typically, historically, mean reverting pairs. And so we saw those positive returns for fading dollar strength in this particular case or environment that we're in. Euro dollar delivering the highest risk-adjusted returns because of those margin requirements and its historic performance. And dollar Swiss franc, perhaps not, not only not being favorable for contrarian strategies particularly, but not really a lot of success in the momentum strategies as well. So all this tells me is my takeaway for trading that pair is not one way or another. Perhaps the study as it was set up is not as conducive to this pair's price behavior, maybe from a percentage basis, maybe from a volatility basis. Perhaps it's something where, even in this heightened volatility environment, dollar frank's still holding on to some lower volatility, and so the number of occurrences perhaps a little fewer and far between.